Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you several examples of morning gap trades from this morning. You'll want to stay tuned because not everything is always roses. Let's look at the gainers, let's look at the losses, let's look at the home runs, and let's look at the grand slam home runs. Before we do that, let me explain exactly what this gap trading strategy is all about. You're seeing a sneak peek of one of the trades on the screen. We're going to come back to the charts. As day traders, we need opportunity. In order to find opportunity, we need stocks that are moving at the opening bell. That's what creates opportunities. That's what puts profits in our pocket if we're right. So as a result, in the course at Lazy Gap Trader, traders learn everything they need to know in order to trade the gaps successfully. Which stocks does this work the best with? What are the criteria that we use? What type of volume do we look for in these stocks? How much of a gap higher or lower do we look for from yesterday's close? What type of profit target do we look for? What type of stop loss limitation do we need to have? Where do you find these stocks early in the morning before the opening bell rings? And here's the holy grail, folks. How do you calculate the specific price targets where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction? There's a lot of stuff in this course. And then the second thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. This morning, we had 7 potential gap trades on the board. Now, we had a bonanza out here today. Out of these 7, believe it or not, we had 6 price targets reached. So as a result of that, and I'm not going to make this video too long, we're going to run through them kind of quickly, but you'll get the point with complete certainty what this strategy is all about and what it's capable of. So just take note of these numbers. Shake Shack, gap lower, support levels are 49.43 and 47.23. When I give more than one price target, these are all separate and independent trades from one another. Pay close attention to that because that absolutely came into play today. Stop and profit target is about 35 to 65 cents. Also keep in mind, these are minimum profit targets. The second stock, WTW, Weight Watchers, gap lower. Support levels are 54.70 and 48.68. Stop and profit target is about 40 to 75 cents. The next one, TEX, was a no trade. The next one on the board was OLED, Universal Display, OLED, gap lower. Support levels are 91.71 and 85.23. Stop and profit target is about 50 cents to $1. Keep note of that, and remember that I said these are minimum profit targets. There's an entire video module in the course that teaches traders how to take advantage of situations like OLED today. The next one on the board was a no trade, CC. The next one, KHC, gap lower. Support levels are $50.75. Then I gave another support level very close behind. I said support levels are close together so traders can take a position at the first level and add if KHC continues lower. That didn't happen. We'll get back to the chart in a moment. And then the last one on the board was SYF, and that was a near miss. It was a no trade. So those are the 6 that hit our targets. Some of the stocks had more than one trade. The first one we're going to look at is Shake Shack, and here's a 1-minute chart because this is the best way that I can explain and display the magnitude of what happens more often than you would think. So the stock closes yesterday at $54.80. It's getting a haircut at the open. It opens lower and is trading lower. Remember the email, the first level identified was $49.43. In the third minute of the day, the low happens to be $49.43, and in the fourth minute of the day, the stock makes a high of $51.04, representing $1.61 higher than the entry price, or 3.3% in about a minute. Pretty incredible stuff. So now we go back to the 10-minute chart, and you'll notice the second price level, 47.23. That was the secondary trade given out in the email this morning. And guess what? The stock did come down lower than the suggested about stop loss limitation. So we have to count it technically as a loss. But what I'd like to point out is you can see the power of importance of these price levels. Look, we're not going to win every trade. That's just part of the business. It has to be an accepted part of the business. So the stock spiked through a little bit lower than the 47.23, a little bit lower than the stop loss limitation would normally suggest, but it's still ripped back up in the other direction, shows you the power and importance of these price levels. When markets are volatile like they have been lately, traders tend to use wider stops and smaller share size as a result. The next one we're going to take a look at is Weight Watchers. The stock closed yesterday all the way up at $68.49. The stock was getting whacked at the open. We identified two levels, 54.70, 48.68. The 54.70 just flat out didn't work. Even if I go down to a 1-minute chart, it just cut through the level like a hot knife through butter, which is precisely why we use stops. Again, not every trade is going to work out as we plan it, but we do win the majority of the time, and when you keep your losses to a minimum, you keep your losses small and fast, and then you pile on the winners, boy is that a recipe for success. Look what happened at the $48.68 level. Now I can go down to a 1-minute chart and also show you just an equally magnificent spike higher, about $1.27 or 2.6% as soon as it hit that price level. Since I'm discussing it, I might as well show it to you. There it is on the 1-minute chart right there. So that represented $1.27 or 2.6% in about a minute. Now, it doesn't happen like that every single time, but it does happen. How about Kraft Heinz? The stock closes yesterday at $56.20, getting smashed down at the open. We identify a level of $50.75. What happened next is rather obvious. $50.75 was the level from the email. From the point in which it hits $50.75, you can see the rest is kind of history. You can see what happened later on. The stock is found at a high of $52.52, which represents $1.77 or 3.5% in just under an hour. It is pretty remarkable, folks. And here was the prize. You had to save the best for last. Before we even discuss OLED, I need to make mention of a couple of things. Number one is the price levels that you're seeing here are the same price levels that traders who take the course are able to calculate and find on their own. Everybody needs to understand that. And the second thing is you never know when the grand slam home runs are going to show up. So let's just go over this one real quick. So OLED yesterday closes at 129.65 all the way up here. The stock is absolutely getting creamed at the open, taken out behind the woodshed, shot twice, left for dead. It's down like $39, like 30%. Half an hour before the opening bell, and any trader that's taken the course is able to come up with $91.71. If the stock is drawn to that price and hits that price, it's going to have a price reaction in the other direction the majority of the time. Need I say any more about this one? In the course, there's an entire video module that explains how traders can take advantage of situations like this, how to turn some of these trades into risk-free, emotionless trades, enabling you to catch the majority of the run all day long. This stock went from entry $11.44 higher, or 12.5% in one day. The stock was down 30% at the open. We caught the low by 35 cents, meaning the low that was actually made was 35 cents below the entry price. The stock was down $39 at the time. Where else can you learn that? I'm sure there are other places, but if you want to learn it from here, then come check out the course at lazygaptrader.com. In there is everything you need to know in order to trade the gaps successfully. I'm David Frost. Thanks for tuning in, folks.